Well, welcome back to HRE Insights in 30, the podcast that brings practical, real-world insights on compliance, fraud, and financial risk management to fintechs, banks, and high-risk financial businesses. I'm your host, Justin Muscolino, CEO of High Risk Education and home to the FinTech Training Center. Today, we have a really special guest. Our guest today lives where theory really does meet production risk. Inside payments operations, fraud programs, and the messy middle of scaling financial products responsibly. Troy Huth has built and led fraud, payment risk, and financial crime programs across fintech and banking environments. And it's done a lot more than that, but I'll let Troy explain for himself very shortly. Troy, welcome to the show. Troy, welcome to the show. Great to have you here.
Justin, thank you so much for inviting me. And I'll just start off with one correction. My last name is Huth.
Ooh, thank you.
You're welcome.
Okay, my bad.
I was worried
Uh,
about mispronouncing your last name, but I'm used to it. I'll answer to anything close to it.
Well, now I know what you said about editing. Perfect timing. All
No
right,
problem.
so we'll edit that out. And I'll fix that up. All right, so let's get on to the first question, like your career path, because I alluded to it a little bit in the introduction, but I think you'll serve it a lot more justice than I will. Now, you've worked across fraud ops, payment risk, financial crime leadership roles. So, what really pulled you into this space?
As a kid growing up, I always wanted to go into law enforcement, and my parents were very risk averse and they really highly discouraged it. So I got a job right after high school while starting college as a teller at a bank. And I just kind of stayed in banking. And over the years, I different career paths. I wore many different hats from, call center management to IT management, project management, and then eventually moving into fraud management. And I found that turned out to be a perfect blend of experience from why I had to bring my passion kind of for law enforcement together along with my experience in banking and merge those two together. So early on in my teller training, when they were teaching us about cash handling, they didn't teach you what counterfeit currency looked like. They taught you what authentic currency looked like. So once you're so familiar with the real thing, what that looked like, the counterfeits jumped out at you. So as I went through my career working different roles, in IT, I learned how the systems work. I memorized all the monetary controls. I learned how money moved so that when abnormal came along, it jumped out at me.
Hmm.
And I'll borrow a quote from Carice Hendricks. She says, people often arrive in fraud as a career by accident, but they stay on purpose. And when I got there, I just felt like it was my purpose, and I stayed. And then, fast forward to making the jump to REM Roundtables, while working in fraud with my last employer, I was a roundtable member and I saw the value of the industry collaboration and the opportunity to have influence and problem solve at industry level. So that intrigued me to make the jump over here to REM.
That is really interesting path. Listen, like you started as a teller, I started as a customer service rep. Never thought I'd be in compliance or even doing training at this point, but it's always interesting to hear where you came from. So talking about payment systems, right? So we'll segue to that. They work great until they really don't. So from what you've seen, what are the most common ways payments and fraud programs really start to break as like fintechs and banks scale even more?
As they scale, you really need to have people who know how the systems are supposed to work and what the controls are and whether they're working. And as the volume scales, it's hard to have eyes on everything. So what typically goes wrong is not having the right monitoring in place, not having controls in place, or having a lot of manual controls that can break. So you need to have really look at having automated controls and monitoring in place, testing your controls to make sure they work. And another big miss is really not having access to your data early on. When things start to go south, there's always this scramble to get access to the data that you need to do the analysis you need, or to put controls in, and getting access to that data in real time or near real time. So I think one of the biggest causes of breaks as things start to scale is just not giving careful thought and planning to building out your data environment early on.
Oh, that's interesting. Like, and the control part too. I mean, that's essential. And that kind of brings us to next question. Fraud teams are constantly balancing, friction versus protection. So in your experience, like where do institutions get this balance wrong? And, how should leaders think about the risk without, I guess, killing the customer experience, saying it mildly?
Yeah, I think all too often one side of the coin has a seat at the table and the other one doesn't, or one side has more of a voice and the other one doesn't. You've got your product, your marketing, people who are focusing on meeting product goals, they're focused on the experience, but maybe fraud doesn't have a seat at the table. So many times I've heard from leadership as they're planning a new product or a new feature, a new function, and they'll say, hey, don't bring fraud into our planning until later on because they're just going to slow us down. And what happens when they bring fraud in at the last minute is fraud is forced to put the brakes on a project to quickly put in some rudimentary fraud controls that might not be the best experience. And it makes, fraud look bad. It looks like, okay, you're forcing us to have these really bad experiences, or you've slowed our project down. But what I found, if you bring the fraud team in early on, you build together and you work together on that timeline, and you've got time to work on a balanced solution that really has a healthy balance between the experience and managing risk.
Oh, that's interesting. Now I got another question because this also hits home with, bank fintech partnerships, and it's something that, we're into pretty heavily. I mean, you've seen how payments risk plays out across the bank fintech partnership, but, where do these relationships most often fail when it comes to like things like fraud ownership, escalation, and of course, the dreaded A, accountability?
Yeah, yeah. I think so often with these types of partnerships, there's not any clear understanding of accountability. I think you really need to, early on in the relationship, build that into the contract, know and understand and have it documented who owns what. And don't make assumptions. Don't assume this side of the fence is doing this type of monitoring, tracking, and reporting, but really make sure it's documented and make sure it's a part of the contract. And if you're already in that relationship and you don't have that in place, go back and see, does this contract need an addendum to make sure we put this in writing as who's responsible for what. You want to make sure you've got checkpoints, requirements to provide evidence of controls, that you've got those in place, that they're being tested. Require notification of control failures and breaches. You don't want to be outsourcing something to a third party or leveraging a fintech and there not be good communication if there's a breach, for example, or something along that line. You don't want there to be a finger pointing exercise, and you don't want to be you want to be sure that the lines of communication and responsibility are established up front.
Yeah, no, no, good answer, Troy. And one of the things that a lot of banks and fintechs worry about is their, spend, their budget, because the requirements sound like they get more intense every year. But if you had to give like three good practical steps teams could take tomorrow to strengthen their, fraud and payments risk programs, what would you recommend?
Thinking about it from the perspective of budget, you mentioned, they don't have a good budget. I think one first thing, start with communication. You want to internally build a culture of fraud awareness, response, communication. You want to make sure you've got a communication loop where your frontline can report things that they see, and make sure your leadership is paying attention to it. Make sure employees are trained to think outside the box and not simply be button pushers. Um, you want to make sure that your frontline people are empowered to stop and ask questions and pause a transaction if it looks suspicious. So that's the internal side, building that culture of awareness, response, communication. You also need to have a source of external communication and industry engagement. I would say it's so important to participate in industry roundtable discussions, for example, so you can hear and know what's going on in the industry. Maybe something hasn't gotten to your financial institution yet, but even worse, maybe it's happening right under your nose and you haven't even seen it yet. But by hearing what's going on elsewhere, you know what to go and look for, what to be prepared for. So it's important to have good industry engagement and know that you aren't an island unto yourself. I think second, again, if you don't have a lot of money to spend on tech, leverage what you do have. Simple rules-based alerts, setting transaction limits so you know you've got a ceiling on what your loss exposure is. Making sure you've got things that are just table stakes, multi-factor authentication to help balance that risk versus the experience. And the roundtable, for example, industry participation that I mentioned previously, those are great sources for hearing some of these simple rules that you can implement and catch those low hanging fruit. And then finally, I would say know where you fall in the pack. You don't want to be the slowest gazelle when you're fighting fraud. So that's why benchmarking is so important. It's been proven so valuable when you're trying to get approval for funding, for example, to show where you fall with your peers and to have this data available to show leadership of where you fall in the pack. So if you don't have huge dollars to spend on tech, I think these are three easy solutions from an internal and externally, just to make sure you know where you are in the industry and you know what's going on in the industry.
So essentially what you're saying, there are resources out there. If you have limited spend, you just have to explore them and really take advantage of your relationships and everything else.
Absolutely.
Yeah, no, I totally agree. Well, Troy, big thanks to you for, coming aboard today and sharing your insights. Love to hear them. So thank you very much for coming aboard today. I really appreciate it.
Always a pleasure. Thank you so much.
And for everybody else, thanks for tuning in. Stay curious, stay disciplined, and we'll talk to you next time. Everybody have a good day.